So remind us what a confidential IPO means.
So under the Jobs Act, if you're a company that makes less than $1 billion in revenue annually, you can actually file secretly, basically. And it gives companies the opportunity to kind of test the waters with investors, have conversations with investors that they weren't allowed to have prior, to sort out valuation and do some of these things like that.
So what is the timeline between a secret filing and a public filing and then going public?
So this could actually sit on file for a bit of time here confidentially. We have reported, as you said, they're looking to go in the first quarter, as soon as March is kind of what our sources are telling us. So we will see them come out and file publicly closer to that time. Then you see them set terms, go on the roadshow, and then actually list.
Is there any kind of urgency for Snap to go public? I mean, a lot of companies, Uber, for instance, have plenty of cash coming to them. They don't need to tap the public markets.
Right now, it seems like this is basically a capital raise and giving some of their existing investors liquidity. If you look at Snap, it's actually not that old of a business. It's been around less than 5 years. That's a quick time for them to actually exist and then go public. So in terms of historically, the timeline of tech companies listing, it seems like it's just more of them getting out there, getting the capital, because they've tapped actually a lot of different pools of capital until now, and hitting public markets.
And do we have any sense of whether the company is profitable or how big it is from a revenue perspective, anything like that?
They're not making money right now. They are aiming to generate more than $350 million this year. That's up from $59 million last year. Sources have said that.
So that's massive revenue.
It's massive, but not really. It's massive revenue growth, but it's not really massive amounts of revenue.
Right.
Sources have said they're looking to $1 billion next year, but that's still not a lot of money for a company with the fanfare and the private valuation of $18 billion and the aspiring public valuation of $25 to $35 billion. So it seems like there's some justification of valuation that will have to go on to convince investors to buy into the story and not just what top line looks like.
So Joe is always on his phone. He's using Twitter. He uses Facebook. I don't know if he uses Snapchat.
Every once in a while.
Every once in a while. What else does Snapchat do besides its app, the camera app? I mean, is there something more to it? Is there going to be a bigger story here that the company can sell to investors?
That will be the big pitch on the roadshow. You know the genesis of the app. It was a photo sharing thing. They've added different things like stories where you can link all of your photos and videos together. And then there's Discover. Discover is where advertisers and content creators can actually put stuff into it. That seems to be where a lot of the focus is right now, and that's where they're gonna make money. That's where your ads are gonna come in. So it will be extremely important for this company to lay out to investors exactly how revenue is going to come in, because look, when you look at the comps that are out there, you've got Twitter and you've got Facebook. Facebook has been able to make money off of its users in a way that Twitter hasn't, and we've all seen how Twitter's fallen off a cliff since it went public.